Hey everyone, welcome back to Corporate Decoder. Today PROV just filed an 8K and I am seeing a common move that all income focused investors should watch. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is paying out a dividend, which sounds great. But the real story is about how consistent these payouts are and what it signals about their financial health. Provident Financial Holdings Incorporated, or PROV as you know it on the stock market, is a regional bank holding company. They operate primarily through their subsidiary Provident Bank. They've been around for a while, and like many banks, they often use these filings to announce important corporate actions like dividends. So, what happened on the 23rd of July 2026? Well, the company's board of directors made a decision to declare a quarterly cash dividend. This is essentially them saying they are going to share a portion of their profits with their shareholders. They've announced a dividend of 14 cents per share now. 14 cents might not sound like much, but for investors who hold a lot of shares, this can add up. The crucial details here for shareholders are when they need to own the stock by to get this dividend and when they will actually receive the money. If you own PROV stock by the 13th of August, you'll get paid on the 3rd of September. This is a pretty standard timeline for dividend payments. The news release attached here, Exhibit 99.1, is what contains the official announcement. While this filing itself is brief, the underlying story is about the company's ability to consistently generate enough profit to reward its shareholders. For banks, a steady dividend can be a signal of stability and profitability. But it is always important to look deeper. PROV's common stock is traded on the Nasdaq stock market under the symbol PROV. The shares have a par value of 1 cent. A quick look at their market cap shows they are a smaller player in the financial services sector, around $108 million. This means even small changes can have a bigger impact on their stock price. When we look at the external context for PROV, we see headlines about them naming a new CEO and a new lending chief, which indicates some management changes are happening. There was also news about their earnings expected to grow, which is positive. However, what is really important for dividend-paying stocks is cash flow and profitability. If a company can't consistently earn money, that dividend can be at risk. Looking at their top institutional holders, you see some significant asset managers like Dimensional Fund Advisors and Raffles Associates. These larger holders often look for stable income streams, so a consistent dividend is something they'd value. What is missing from this particular 8? K is the actual financial data that tells us how they can afford this dividend. To truly understand if this dividend is sustainable, we'd need to dive into their quarterly and annual reports, looking at things like net interest income, loan loss provisions, and overall earnings per share. A consistent dividend usually means a company feels confident about its future earnings. If those earnings falter, dividends are often one of the first things to be cut, and that can send a stock price tumbling. My biggest concern with a company like this is not necessarily the dividend amount itself, but the sustainability of their business model given the current economic climate and competitive pressures in regional banking. The fact that they are a smaller regional bank means they could be more susceptible to economic downturns or interest rate changes compared to larger national banks. What I'm actually looking for is confirmation of sustained earnings growth that can support this dividend over the long term. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like, subscribe, and join our Discord, all linked below.